Welcome back to the channel. This is my third video in this series where I am building a portfolio using spare change and investing it into dividend stocks. So in the last video we talked about how I have purchased my first stock, my first dividend producing stock, which is called Pepper Money, which is a finance company here in Australia that does house loans, personal loans, finance, things like that. And on a bit of a roller coaster ride, as you can see, we started out on 522 and then we dropped down yesterday to 510. I almost panicked, but I held my nerve. And as you can see, we're trending back upward again, so 515. So this is all about, growth. I'm not really interested in that. Well, I am, but not as much as I am in the eventual dividends, which I'm hoping to get. So I'm still umming and ahhing about what stock I should get next to sort of build my portfolio, so the next brick in the wall, so to speak. And I should also mention that this is in Australian dollars, so I haven't worked out how to present this in USD at the moment. So $515, just so we know, in USD is about 345 United States dollars. So not a whole heap, but we will get there. So you can see that there are, there's Australian dollar is a little bit higher than the greenback, so we're tracking in Australian dollars at the moment, but we may change a little bit further along. So what I wanted to do today is have a look at a video featuring Warren Buffett, who'll be talking about why investing in dividend producing shares or just the stock market in general is, in his opinion, superior to trading in real estate. So in Australia, people love investing in real estate. It's a pretty big market, and it's something that's always been on my radar, but it's something that I've never really pursued seriously. I've always had the idea that if I do get into investing, I'll probably do stocks, and I'm interested in watching this video to sort of see Warren Buffett's opinion on this conversation and where he fits into the whole thing. So here's Warren appearing at one of these conferences. I think it's a Berkshire conference or something like that, a shareholder conference, taking some questions. I think he really enjoys this. He loves sitting up on the stage. He's always got a couple of Cokes with him and just being the doyen, being the man on the mountain, responding to questions. So let's hear the question as put to him.
Correct, and Ajit. My name is Jackie Han. I'm from China and now work in Toronto, Canada. This is my 8th Berkshire Hathaway meetings at this point. I've probably spent more time with you than most people spend on Netflix.
So basically saying, I love you, Warren Buffett. Huge fanboy.
You might guess, coming from a Chinese family, we've always had a soft spot for real estate. So the real question isn't why don't you own a house? It's why are you still buying stocks instead of more property?
Well, in respect...
Sorry to cut you off, Warren. Yeah, so that's similar. What the questioner was saying is, in his culture, buying real estate, buying property is seen as the gold standard, and that's very similar to my background of Australia, where the property market is very strong, and the advice is if you want to build wealth, you've got to get investment properties. So let's see what Warren has to say.
Real estate, it's so much harder than stocks in terms of negotiation of deals, time spent, the involvement of multiple parties in the ownership. Usually when real estate gets in trouble, you find out you're dealing with more than the equity holder. And in real estate, you're usually dealing with a single owner or a family that owns maybe a large property they've had a long time. Maybe they've borrowed too much money against it. Maybe the population trends are against them. But to them, it's an enormous decision. When you walk down to the New York Stock Exchange, you can do billions of dollars worth of business totally anonymous, and you can do it in 5 minutes.
Yeah, so that's a great point. So the first thing he's saying is that, to paraphrase Warren Buffett, if I may, that a piece of property, especially if it's a house, it's a large asset, and to a lot of people, it's It's one of it's their most expensive thing they'll ever own. So they are obviously going to be very cautious with any kind of transactions to do with that. So it's not something that they can just buy and sell in a matter of minutes. But when you go to the stock market, you can do that. You can buy and sell thousands of dollars worth of stocks in with the click of a button.
And the trades are complete when they're complete. In real estate, when you make a deal, a big deal with a distressed lender, when you sign the deal, then you go into another phase. I mean, then people start negotiating more things, and it's a whole different game, and a different type of person, to some extent, enjoys the game. And in stocks, if somebody needs to sell 20,000 shares of Berkshire or something, and they call us and the price is right, it's done in 5 seconds. But the completion rate for working on anything in stocks is, assuming you've got a meeting of the minds on prices, essentially 100%.
I think basically what he's saying there is that doesn't really matter who you're dealing with. Like, as long as you get a meeting on price and the whole thing goes through, it's completely anonymous. You don't need to know who you're dealing with. I think the flip side of that is, because it is so easy, it can lead to people taking risks and maybe being a bit too speculative, which might be one of the reasons why people avoid the stock market. But I think that if you're sensible, I think Warren Buffett's general approach is he's famous for buy and hold, so he's probably not going to fall prey to that.
In real estate, it just begins when you agree on deals, and then they take forever. So for a guy 94, it's not the most interesting thing to get involved in something where the negotiations could take years.
Yeah, that's fair enough, and fair play to the guy. Like, 94, and he's still rocking up to these conferences and answering questions. He's probably answered this question a million times, and he's probably had every other question that he's going to get at the conference as well. So I think that he must just love it. As I say, like, he loves being the doyen up on the mountain, just answering questions and telling it like it is.
3 years to work out a transaction that where you've got parties on both sides that aren't ready to act. We find it much better when people are just ready to pick up the phone, and you can do hundreds of millions of dollars worth of business in a day. I've been spoiled, but I like being spoiled, so we'll keep it that way.
Yeah. And the other good thing about Warren is he likes to end on a laugh as well. So that's Warren Buffett. I've cut down the video a little bit. If you want to watch the full video, I've got a link down in the description. But I don't know a great deal about Warren Buffett, but I know the general background. He's very rich. Just open up Wikipedia. How rich is he? So it says he's at 95. And I think actually recently retired as well. So fair enough. Hopefully I don't have to work until I'm 94 before I retire. But what is he? Estimated net worth at 148.9 billion, ninth richest individual in the world. So he's in the top 10. And good on him. And I think he is the gold standard for dividend investing and the buy and hold strategy, which is really cool. One thing that Warren didn't really go into, I don't think, is if you're getting into property, all of the extra expenses that come along with that. So if you buy, for example, yesterday I bought some shares in a new stock, and I don't have to do anything to run that company or look after it or maintain it. I just click a button and I own part of it. Whereas if you buy some property, you've got obviously you've got any sort of maintenance, you've got rates, you've got insurance. So there's all these added expenses. And another thing that we have in Australia, so people in other countries might not have this. I don't know if you've got similar things, but whenever a piece of property changes hands in Australia, you've got to pay a thing called stamp duty, which is basically the government's way of saying, we want to wet our beaks a little bit here. I can see you're trying to do a bit of business. Give us a bit of a slice of the action over here. So this is in Victoria. This is one of the states of Australia. So I've picked out Victoria because it's got the highest stamp duty in Australia, I think. So if I wanted to buy some property today in Victoria at, let's say, property in Australia is actually at about $1 million on average, but that's mainly city-based property. So let's be a bit sensible and go for $800,000. So I want to buy a new property for $800,000, and this is between me and the seller. And how much is the government going to want just for me to have the right to have that transaction? Am I purchasing a commercial? No. Am I a foreign purchaser? No, I'm an Aussie. Residential property, yes. Is it a new home? It's established home. Looking forward to moving in. Is it your principal place of residence? Yeah, sure. Is it my first home? I'll say no. So $800,000 property. How much does the government want? And this is just a fee. Keep this in mind. This is just the government just takes the money out of my pocket and I never see it again. $43,000. So $43,000 one-off fee, bang. Every single time I buy a house to live in, I've got to pay that. Let's change it to place of residence. No. Does this make a difference? No, $43,000. So there you go. I'm having a bit of fun with it. Let's go for the $1 million property. Have I got that right? $1 million property. I do want to live in my $1 million property. First home? No, it's not, obviously. $55,000. That's a chunk of change right there. So coming back to Warren Buffett, I think that he would probably have a problem with just dropping $55,000, especially if it's an investment. So every single time you buy an investment property, you've got to stump up for stamp duty. So all in all, I'd have to say I'm coming down the side of Warren Buffett. Again, this is not financial advice. I'm not in finance. I don't know what I'm talking about. But I like the flexibility of shares. I like the fact that with one click I can buy a slice of a company that's going to make me money. I don't have to deal with anyone. I don't have to deal with realtors. I don't have to pay stamp duty. Obviously, tax involved with there's, you can't avoid that. There's tax everywhere. So anyway, that's Warren Buffett's take on the property versus stock market debate. I hope you enjoyed that. And coming up, I'm going to be stumping up a bit more cash to invest in another stock and just get another line item down here because, Pepper Money is looking a bit lonely at the moment. So we'll see if we can beef that up a little bit. All right, thanks for watching.